So Sharks, since I don't want to dilute the ownership of my company completely, my ask is that I would like to offer debentures instead of equity, and for that I would like to offer 1 crore worth of debentures for 10% interest.
18%,
18% a bit very high. I would like to come around 30,
16%.
15%.
You have yourself a deal.
Wondering what debentures are? We've got you covered. In this case, the company wanted to raise funds for an upcoming project without diluting equity or taking higher risk. So, they opted to go for debentures. These are basically unsecured debt instruments issued frequently by corporates and governments to raise funds. They are financing options companies use to raise funds for projects without giving up ownership, which means diluting equity, or taking on excessive risk. Debentures essentially act like IOUs, with the company promising to repay the loan with the interest. Governments also use debentures to raise capital.
So what are the advantages of these debentures? Firstly, you get a fixed rate of return which is specified on the debenture, like a 10% or a 12% debenture.
Secondly, the rate of return is generally higher than a bank deposit and can vary depending upon the company and the riskiness of the debenture. Thirdly, most debentures are listed on stock exchanges like the Bombay Stock Exchange and the National Stock Exchange, making them highly liquid investments. This means you can easily buy and sell them on the market if needed. Just to be more precise, all non-convertible debentures (NCDs) issued through initial public offerings get listed on the capital market segment of the exchange.
Next, there are various credit rating agencies such as CRISIL, ICRA and CARE, which mandatorily rate all debentures. These ratings are AAA+, AAA, A-, and the ranking goes down. This helps investors in assessing the risk involved in debentures. A high credit rating translates to a lower risk of default. Debentures have a predetermined maturity period, usually medium to long term, at the end of which the issuer pays the principal amount to the debenture holders. At the worst case of company liquidation, debenture holders have the right to claim the company's assets first over equity and preference shareholders. Finally, they can be a great source of diversification to your portfolio, providing a balance between risk and return. They provide a steady income while potentially offering some capital appreciation.
Now, let's come to the disadvantages of debentures. Firstly, since they are unsecured, there exists the risk of default by the company. However, there are also certain secured debentures which can help mitigate this risk.
Secondly, the credit rating of these debentures can change based on various external factors which increase the riskiness of the debenture.
Finally, the interest rates of fixed rate debentures are exposed to interest rate risk in case the market interest rate is rising. Now, let's get to the various types of debentures: convertible and non-convertible debentures. Convertible debentures provide the debenture holder with the option to convert the debenture into equity shares of the issuing company after a specific period. This allows the investor to benefit from potential capital appreciation of the company's stock price. NCDs, non-convertible debentures on the other hand, cannot be converted to equity share and act as fixed income securities throughout their tenure.
Redeemable and irredeemable debentures. Redeemable debentures are ones which come with a fixed maturity date. The issuer is obligated to repurchase them from the debenture holders at the face value upon maturity. This helps investors gain clarity on when the investment will be repaid. Irredeemable debentures, on the other hand, do not have a fixed maturity date and the issuer has no obligation to repurchase them. These debentures offer a perpetual income stream.
Registered debentures. Registered debentures are those in which the details of all debenture holders, such as their names, addresses, debenture holdings, etc., are recorded in the company's register. Transferring such debentures is a challenging task and only can be done after complying with the provisions in the Companies Act 2013. Bearer debentures. In case of bearer debentures, all the details of all the debenture holders are not registered with the company. Such debentures are freely transferable. That is, investors can easily buy and sell them. The repayment is made to those holding them at maturity, regardless of the original purchaser.
At last, the point for which we all have been waiting for: how to invest in debentures. One may directly buy debentures from governments or any company as and when they declare it. Or, some debentures are also traded on stock exchanges so that investors have an option to purchase them from a secondary market as well as through stock exchanges. Thank you for watching. Do like, share and subscribe for more.